Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a session where we are seeing some amount of upside and strength because of the US market close. But remember that we have a big event ahead of us, which is the US Fed FOMC meet. So let's see what that actually throws up. But separately for our markets, it's a lot about earnings, and in terms of earning reactions, a couple stand out. For example, Maruti as well as Dr. Reddy's from the frontliners. So a lot of volatility on an intraday basis that you're seeing for stocks such as Dr. Reddy's. So that one should come up for you down around 2.2% now after what was a start in the green. And separately from the broader markets, a lot of other stocks in focus. For example, Bandhan Bank, which seemed to be quite a disappointment this quarter, and even something like a Gland Pharma, which continues to see deceleration on the downside. So Bandhan Bank down around 10% at this point in time. And we have Gland Pharma, which is now off the low point of the day, but it's a fresh 52-week low for that particular stock as well. Hi, Sona.
Hey, Ekta, such big moves, right, on earnings. Gland Pharma is something that has lost almost 20% in the last couple of days. But of course, on the Nifty, we are watching out for that 18,000 mark. We've not been able to get that through the course of the day. But yes, just shy of that 18,000 mark on the Nifty at the day's high as we speak. But that is all about the secondary market. We will speak about an entrant into the secondary markets now. DCX Systems 500 crore IPO has opened today for subscription. IPO's retail proportion has been subscribed 1.83 times till 11:30 a.m. Shankara Krishnan Ramalingam, the whole-time director of the company, is joining us now to discuss the business outlook, explain the business, and a lot more. Mr. Ramalingam, good afternoon. Thanks a lot for joining us here on CNBC TV18. Well, I was looking at the profile, and you are actually a contract manufacturer of electronic subsystems and cable harnesses, and you have clients like Bharat Electronics, you have supplies to Israeli companies as well. So a whole host of clients that you cater to. I was looking at your reasons why you are raising this money, and some of it is to pay debt as well. How much of a debt will you be able to pay off with this, and what is the remaining debt, or will you be debt free?
We wouldn't be actually. Basically, as of FY22, I have about 467 crores of short-term borrowings in my balance sheet, out of which, out of the 400 crores that I'm taking into the primary for the company, we are repaying about 110 crores towards the banking system, thus bringing down the leverage from about 4.52 in 2020 to after this repayment to about 2%, paving way for a much leveraging and addressing larger working capital enablement and better business management to happen, which is what this repayment of money will do. And there is enough cash flows that's accruing into the balance sheet. So obviously the leverage will go down further, and there will be a lot of war chest that will get built up within the system itself is going forward is what we believe in.
Okay. So, hi, thank you very much for joining in. If you could just explain to us how much of your revenue do you get from, say, the Indian market, which is basically supplying to the Ministry of Defense, and how much of it is direct and how much of it is via contract manufacturing?
To be very frank with you, actually, we are actually working in special economic zone in the special aerospace and defense park. We are a 100% export-oriented company per se. We are the largest defense offset obligation company for the largest government of Israel-owned company called Israeli Aerospace Industries Limited. And as a defense Indian partner, Indian offset partner for defense obligations on the government-to-government contracts, our business model is completely unique. We are an export-oriented company, and we happen to be in aerospace and defense. We don't have, as on date, any supplies on the existing business verticals to Ministry of Defense at all, except for the licensing portion and the various clearances that we take from MOD India, MOD Israel, etc. We don't have any commercial dealings with the government of India at all. We only cater to government contracts for the Israeli company so far. Oh. And we had grown the aggregation of business from about 449 crores in 2020 to go up to about 1,102 crores in FY22. Oh. Going forward, obviously, we have a very clear plan of the existing cable and wire harness expanding, system integration business going into other geographies, etc. And also, we are getting into a backward integration on EMS PCB assembly, and are getting into the embargo products on getting transfer of technology and product game. That is the kind of integration where we will get into MOD. Thank you.
Okay, got it. So that will happen over years where you will be supplying to MOD as well.
Yes.
Mr. Ramalingam, just wanted to confirm 100% of your revenues are coming in from exports is what you meant.
Yes.
Okay.
And domestic sales also is comprising of exports only. We don't have rupee dealings at all. All our imports, all our exports, only classification between direct exports and supply to domestic company like Bharat Electronics is we call the domestic supply as deemed exports.
Okay. Your margins seem to be quite volatile, and they, maybe on a sustainable basis, ex of COVID, it's probably between 9 to 10%. And correct me if I'm wrong there. But what is a sustainable level in terms of margins that you can guide investors to?
But probably till about FY21, we were largely concentrated on that MRSM program for the IOP customer, OEM customer in Israel. And we were at about anywhere between 3.5 to 5% kind of EBITDA margins at that point in time. FY21 to 22 has been a very significant year in the history of DCX, where we have been able to add the largest public sector undertaking company called Bharat Electronics Limited, which has contributed about 23% of the earnings in FY22. And we have also brought down the single concentration from OEM customer to about 90% to somewhere around about 55% or so. Then from the OEM customer, we have been able to bag on the seamless delivery and supply chain mechanism and the technology that we have adopted. A lot of engineering services getting added to 5 more new projects with better margins. FY22 would be the most ideal year in which all the last 3 years of plan has really come into place, and that probably become the base for the future years to come. And now with backward integration and forward integration into more better margin oriented areas like EMS and product game, etc., I see the consolidation of margins happening and moving forward.
So you are maintaining that margins will be around 10% of upwards from here on. And also, what about your revenue growth? You have clocked revenue CAGR of 57% in last 3 years. That's quite impressive. Will you be able to continue that? And also give us the margin guidance. Is it 10% and above?
I think I will answer it in 2 ways. I don't know how much of it that I can talk openly on when the issue is open. I'm constrained by the RHP and those kind of guidelines. And as very seasoned anchors, you are aware of all those kind of restrictions. What I can broadly say is, of course, the margin would continue to expand from the FY22 levels with more business verticals getting added into the company, number one. And number two, in terms of the business visibility, I think right now we are sitting on 2,600 crores of confirmed order book on hand, which is to be executed in the next 2 years, auguring well for a consistent high CAGR growth is what I can probably say. And since we have been growing very rapidly at a CAGR of 57%, we have reached a threshold of 1,102 crores as a higher base for FY22. And in terms of percentage, we may not be able to maintain that same percentage growth. But in terms of quantum and a higher CAGR growth, based on the existing order visibility and the opportunity that we are sitting on, definitely yes. This will be a comprehensive 360-degree business model, catering to end-to-end capabilities of our global OEM with very matured business models attached to it, with huge potential, both in terms of aggregation of top line as well as the growing of the EBITDA margin. That's the way I would like to categorize it.
Okay, all right, Mr. Ramalingam. We're going to touch base with you once you do list so we can get more numbers and forward-looking statements from you. Thanks very much for joining in and speaking with us. So that's DCX Systems. The IPO opens on the 31st, which is today, up till the 2nd of November. They're looking for a fresh issue of around 400 odd crores and an offer for sale of around 100 odd crores. It seems as though the IPO market as a whole is picking up now, considering that we do have Medanta, which is going to be hitting the market soon enough as well. Need to take a short break, but up next, Dwarikesh Sugar Industries is going to be joining in to discuss.
Welcome back. Well, we are going to be focusing on Dwarikesh Sugar. The company reported a weak set of earnings for second quarter. Margins for both sugar and distillery segment contracted. We have Mr. Vijay Banka, the MD of the company, joining us now to discuss the earnings fine print. Mr. Banka, good afternoon. Thanks a lot for joining us. Well, that's the bigger question. There is a margin contraction both in your ethanol and your sugar business. What led to this? Was it largely led by higher cost of inventory? And what kind of raw material pressures did you face?
Very good afternoon. Yes, I must confess that the results have not been all that good. There has been contraction in the profit as well as the margins. The main reasons are, number one, there have been some one-off expenses that we had to account for in this quarter. One is the arrears of wages, which we are required to pay retrospectively from 2018. So that has come into effect in this quarter and this half year. Secondly, our molasses requirement for levy purposes stands increased to 20% from the earlier 18%. So this is again for the seasons 2021-22. So, we had to actually, it was a case of lost opportunity to manufacture and sell more ethanol. And thirdly, our distillery got commissioned in the month of July. So, we had some initial teething problems, and therefore the recovery there was little lesser. And fourth, of course, the sugar that we had produced in the last season, where, well, the sugar price, the sugarcane price was up, the recoveries were little low. So the cost of goods sold was little higher. So these are the reasons which are responsible for contraction in earnings. But having said that, I must say that these things are now behind us. When we look ahead, there's going to be a whole set of new dynamics, because for the first time we are going to be using sugarcane juice for making ethanol directly. So all these factors should see some rebound in our earnings and profitability in times to come.
Sure. Mr. Banka, over the weekend, the gap on sugar exports was extended till next year. How exactly is that going to impact your business?
No, you see, basically, it's not a negative news as is made out to be, because what the government is trying to say is that the sugar export is going to be regulated. So the regulation will continue till the next year, which means one cannot export the way one wants to. But the government, we expect government to announce the export quota for the season 22-23. So the expectation is that 6 million tons is going to be announced immediately, and maybe 2 or 3 million tons will be announced after a couple of months. So there is a clear understanding that sugar needs to move out of the country, and because we are looking at a bumper sugar season ahead, so it will be allowed. It's not that there is going to be no export at all. There is, of course, going to be export, but under the government's supervision and under government's regulation.
Mr. Banka, how are sugar prices trending right now from the peak? How much have they fallen? And with the bumper sugar production that we are expecting, do you think there could be more pressure on sugar prices?
No, I don't think so. It's actually, I must say, it's rather intriguing that sugar prices have not gained as much as they should have gained, because season 21-22 we are closed with an inventory of 5.5 million tons, which doesn't even translate to about 3 months consumption. So which has been the lowest inventory in the last few years. So in spite of that, the sugar prices which should have taken off in the last 2-3 months haven't taken off. In fact, the corresponding period last year, we had better sugar prices. But the dynamics, the numbers, the sugar balances and all are reasonable. We expect, of course, a bumper sugar production season ahead, but there's going to be export allowed. And so largely the expectation is that by the end of 22-23, again, we should end up with a similar inventory, which is a very reasonable and healthy inventory, which should not lead to any kind of fall in the sugar prices. But at the same time, there may not be runaway increase in the sugar prices. But ethanol is going to be the key sector, because, most of us, we are going to be, our product mix is undergoing big change, because more than our focus is going to be on ethanol. So we're cutting down on sugar production. We're going to be making more ethanol in the times to come.
How much are you going to divert towards ethanol?
From an ideal level, where we could produce about 45-46 lakhs quintals of sugar every year, we had already reduced our dependence on sugar by making use of B-heavy molasses. But the larger sacrifice of sugar production is going to come in the season ahead, where we'll be making use of juice, sugarcane juice directly for making ethanol. So, which will we expect about 30% reduction in our sugar production.
Okay, so what would that mean for your margins overall, since more of it will go towards ethanol production? Expect an uptick in margins overall and just for the ethanol business?
Yes, because sugarcane juice is going to be used for making ethanol, and during the season and in the off season, B-heavy molasses is going to be made use of. So definitely we see improvement in our earnings in the times to come.
Okay, all right, Mr. Banka, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Dwarukesh Sugar. The stock is down around 3.3%. It's been a tough quarter for them, where there was a significant reduction in terms of the operating profit. They did say that there was some amount of one-offs, but realizations have come off this quarter as well. We need to take a short break. But on the other hand, we are going to be focusing on more stocks as well as... Welcome back. Well, just watch out for a couple of stocks such as Sun Pharma, which is your top gain on the Nifty at this point in time, comes out with numbers tomorrow. So there's a lot of optimism on that one, up 3.5% for Sun. But let's talk commodities now. Manisha Gupta, commodities editor, is here with us to tell us what she's tracking today. Manisha.
Ekta, thank you so much for that. Well, we have been looking at various commodities, but I want to focus on the horticulture numbers right now. And as per the government's third advanced estimates, we are looking at a record horticulture crop. So whether it's fruits or vegetables, we are looking at very strong numbers there. Tarun Arora is director at IG Group of Companies, and he joins us on the show now. Tarun, hi, good to have you. Record numbers, when we look at that, how is the current year looking like though? And when you look at the import of fruits, that also has continued to increase on a year-on-year basis. How is the overall business looking like?
Yeah, the last year's aftermath in terms of the total numbers were not looking positive, but now looking at things, it's looking very positive. But again, this is where the challenges starts happening also on the supply chain when the supply chains are tested. When I've been talking on increase in the infrastructure spend in terms of supply chain, and now is the time that we will probably get to know that how that will impact. And already we see that in the fruit prices too, wherein the overall energy demand is increasing, the fuel prices are increasing, but on the other hand, fruit pricing are actually decreasing because of the glut that happens in the market with oversupply situation. And now, it's important that we carry it out with the right post-harvest management and the right infrastructural spend on this, so that we are able to carry out the production which is coming into play.
So, Tarun, that perhaps is good news for consumers then, because we've seen prices of almost all commodities go up. If you're saying that the fruit prices actually have come down because of oversupply, is that a phase? Is that a small window that we've seen though?
Yes, it's a window. Again, when I look at now, most important commodity when we talk about fruits, you talk about bananas, you talk about apples. We're just getting out of the apple season, but apples have been under pressure and significant pressure because of oversupply. And we've seen that not having enough cold chain has really given a consumer over the last 2 months apple prices being very, very competitive and much lower than last year when you look at the B2B business, and not necessarily it will have the same impact on the consumer level, because but still at the consumer level too, you would probably see a 10 to 15% drop continuing probably this month, and then again probably coming back to normalization. Now it just sort of applies to each and every crop in the same sector. The rains have hit hard, so which will mean that there could be, for example, the melon sector will be hurt because the sowing has not gone in. The banana sector will be hurt because again the sowing has not gone in, harvest has been delayed. The grape sector is going to be hurt in the coming quarter. So again, among fruits also you will see, including vegetables too, the sowing has not gone in over the last, especially due to the unseasonal rains that have happened and the climate change that is affecting the total sowing of the whole product.
Tarun, also, how would you look at the food processing industry? Because that accounts for 32% of total food. Do you think a lot of shift has happened from fruits and vegetables to food processing, or that is something that still is very desired?
It is desired, I would say. I mean, especially when you look at fruits, the supply chain are not robust enough, and the prices even from the food processing window, since the consumption is most still export driven, and the domestic food processing window, other than just the beverages, not accounting significantly, and which is more consolidated as a market. I would say that there's still a lot of work which must be done on food processing when it comes to fruits and vegetables going into that market. So and also from the prices. I mean, the prices that we're currently getting from the food processing is not as good. So it has to then rely upon our farming practices in a very different way, because then you're not growing for table food but for food processing, which will incur less input costs. So accordingly, we need to really drive our strategies based on that. But that's where I feel food processing needs to still take up more accountability in terms of raising the prices for farmers to be competitive, to be able to drive that market well.
Tarun, also, we've seen the imports of perishable goods into India also increase quite strongly. Prices, as you said, have been quite normal there. The government has made a lot of measures, pushed into a lot of subsidies when you look at other food items. Have you seen that happen with horticulture as a sector?
I would say it is a no change strategy from the government in our sector at the moment. We've not seen subsidies to go down what were there. Introduction of the new subsidies continue to come, but not significantly. There have been a couple that have been launched, especially on the post-harvest management side, and a couple on the pre-harvest side too. However, still, I don't see a significant push there at the moment when it comes to fresh produce as a sector.
Going forward, what are your expectations then? Because we know when you look at FMCG and various other consumer goods, we're looking at Diwali sales being quite on the higher side. Does that seem like a trend also in fruits, in perishables?
Absolutely, it does. It does have a positive effect. I mean, the consumer are getting into the fashion of giving more gifting when it comes to fresh produce, which is great trend to see. And India, especially coming, from being a very high, mithai consumer or dry fruit consumer during the Diwali, coming on to the trend of gifting fruits is a great trend, and that's something really helps pushing the demand during that time. So we are off a good Diwali season, and now it's about pushing the demand through regular channels of consumption in the consumer space.
Well, absolutely, Tarun. I'm sure with Diwali gifting, and now especially with winters coming in, this is a time that people do actually tend to take in a lot of fresh produce. But just to get a sense of numbers, I mean, when it comes to Diwali gifting for fruits and buying, how has the trend been over year and year, and what is the kind of consumption trends within India that you are seeing year and year, and also in sense of growth?
So from the industry, since we're very unorganized as an industry, it's tough to get the overall holistic numbers on the Diwali gifting. But let's talk about our own ecosystems. Among IG groups, we've seen a 50% increase in total overall sale in that channel of Diwali gifting, which is very promising. So we are always pushing that channel quite a bit. This year we launched a new range of just the fruits on Diwali, which was great, and it ran really well. So we are very happy, and it seems to be very promising. So each year it has become a sector that has taken, our channel that has taken our attention significantly, and I think it will continue to grow.
Okay, fruits, mithai, dry fruits. I'm sure we all contributed this time around to that. Tarun and Manisha, thank you so much for taking us through that discussion. And on that note, we'll do one thing. We'll slip into a short break. On the other side, our Market Master segment. Christopher Wood.
Back. Well, one of the stocks which is in focus is Dr. Reddy's. It came out with its numbers post-markets on Friday, and despite it being quite a blockbuster quarter, remember that the numbers were aided by Revlimid generic, the blockbuster cancer drug, where they've launched all 6 versions of that drug or strengths of the drug, and they have exclusivity on 2 of that. So that really contributed in terms of numbers. But X of that, seems as though the street is a little worried when it comes to growth in India as well as US going forward, X of the cancer drug Revlimid generic. In fact, we did speak to the company. Let's listen in to what they had to say.
The product meaningfully contributed to this growth. At the same time, we have other good products as well in the US. So we cannot share, as it's part of a volume limited settlement that we had with the innovator, we cannot share exact numbers, but we believe that this product, as well as the other product, will continue to contribute meaningfully also in the next coming quarters. I cannot share numbers, but it is a very good launch for us, and it's going to continue to be like that as well, as you said, in the next coming quarters. What we are saying all along, we believe that what we want to contribute long term is double-digit growth, 25% EBITDA, 25% ROC, no debt, and amazing upside. this continued to be the same. And from time to time, you see, this quarter, naturally, the parameters we were even above that. This is allowing us to invest more in R&D, more in the future. And when we will be with the better EBITDA, it will enable us to invest more into the future. So I will say that this quarter is very consistent with the quarters that came before, and with the timing of products. Sometimes we have more and sometimes we have less. But overall, we are very comfortable with the 25-25 that we are discussing for the last several years.
All right, that's the word coming in from Dr. Reddy's. But with that, we'll slip into a short break. Before we do that, here's some great news for investors. You can now track US market actions real-time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets.